What's up guys, how you doing, and welcome back to my channel. This video is going to be dedicated to the American journalist and the co-founder of the Dow Jones company, who is Charles Dow. So make sure you watch this video to the end because I'm going to be overclocking my balance again and it's going to be very interesting. And as always, if you would have any questions, you can ask me on Telegram. The link to my Telegram, you'll find it in the description below this video. And also the link to my Telegram channel where I share daily trading signals and I also run weekly marathons to increase your balance from $150 and up to $5,000 every week. So make sure to join the marathon and join my Telegram channel. And to sign up for Pocketoption and to get 50% bonus on your deposit on Pocketoption, make sure to text me today on Telegram to get the registration link. And without further ado, let's get straight to trading. As you can see, I only have $50 on my balance and I'll overclock my balance today, and I will be trading the euro and the US dollar currency pair. And the time frame is 1 minute. So I made a down trade for $50 for 1 minute, and I made this decision based on the data from the Arun indicator. So during the consolidation of the price, the situation we had was the price moving up and down in a certain corridor, and the price has been at the top, so it was moving up and it has not yet reached the support level. Therefore, I thought it will continue declining to the support level, and that's why I made a down trade. So let's see how our trade is going to close. And while the trade is on, I want to start my topic and also tell you more about Charles Dow. In order to understand the essence of technical analysis and also market analysis in general, it's better to find the original source. And to do this, I want to go back with you 100 years ago, or more than 100 years ago, when the Dow theory was developed. And before doing that, our trade is closing and our trickles of profit added to my account, $94.50. Amazing result, and let's keep going. Let's continue our topic. And the Dow theory was developed by Charles Dow in his editorial column in the Wall Street Journal, which he co-founded in the period between 1900 and 1902. Now, Dow was a brilliant journalist, and he described the structure of the stock market and how it can be used to determine the state of the economy of the whole country. And this theory defined technical and fundamental analysis as we know and use it today. Let me continue the overclock, and I want to increase the amount. Let me go all in. Getting back to the Dow theory, actually it has never been published in its full form. It was done later by the followers of Dow Charles himself. They introduced it in several of their works. We can mention Williams B. Hamilton, Robert Rhea, George Schaefer, and Richard Russell. And Charles Dow is actually an interesting character. He was the founder of the Dow Jones and the Wall Street Journal, and he was born in a simple farming family. And I made an up trade for $94.50. Here I saw a change in the support level, which is in our case is the lower limit of the Duncan channel indicator. And since the consolidation continues, I now expect the price to rise in the direction of the resistance level. So let's keep going and continue with our topic. So Charles worked as a journalist in one of the newspapers, and Dow was assigned to write about various historical events. So gradually he began to study various economic phenomena of the past that influenced the present. And Dow's research was striking in its depth and details, and his supervisor noticed his work, and Dow began to work closely with bankers and stock traders to write more significant journalistic investigations. So Dow learned the underside of the financial world. And our trade is ending. Our trickles of profit added to my account, $177.66. So we continue our story. He moved to New York. He met Edward Davis Jones, another journalist. So the Dow Jones company was originated from the meeting of these two guys. And this is how the today's famous Dow Jones Index was founded. And in 1889, the first edition of the famous Wall Street Journal was published. So let's say he was the underdog. He started from the bottom as just a reporter, and he founded the world's most famous financial magazine. And now I want to increase my trading amount, and we go all in again, and let's continue our story. So this theory was the basis of the modern technical analysis used by traders all over the planet right now. And all traders study it before they get to Wall Street. And now I'm getting back to trading. I'm gonna make a up trade for 177.66 and for 1 minute. Alright, and since the situation has not changed much, I expect further growth of the price. So the market has everything you need to know to take into your account. This is the first thing you need to learn. And according to Dow, the asset price already contains all the necessary information about the past, present, and even the future. All the data is embedded in the price itself. Except, of course, unpredictable data like the exact date of a new earthquake, but even the risk of this extraordinary event is also embedded in market prices. All this does not mean that the market participants can reliably predict future events. In fact, market prices simply contain all the factors that affect them and may affect them in the future. As the situation and market risks change, the market itself changes, reacting to new information. And that's how it basically works. Right now, our trade is closing, and our trade close a profit added to my account $334. We keep going, guys. Now that every trader knows that the market has all the data embedded within it, however, at the time of the Dow, such an idea was revolutionary. The very idea that only a chart is needed to analyze a chart was a real breakthrough. The theory is based on price. However, the Dow was talking about the market as a whole and not about the prices of specific assets, whether stocks or currency pairs. His followers have adapted the theory. Speaking of price, I'm gonna now raise it. I'm gonna go all in, $334. And let's find a nice entry point. And in relation to the entire market, and according to the Dow theory, it's necessary to monitor the movement of the main market indexes. If they were trending, they affect the mood of investors. So the first conclusion is that the market gives you hints, plenty of them, to understand the future movement. Alright? And I'm making an up trade for $334 for 1 minute. And as I said earlier, the price continues to grow, so we follow the trend. But trend analysis is already the next stage of the Dow theory. So when the market moves in a certain direction, it never makes it in a straight, beautiful line. The market always moves like this: a new peak, a pullback, a new peak, a pullback, and is followed by a new maximum value or a new pullback, and so on until the trend changes. So that's basically how it works. Alright, so let's keep monitoring the price. So basically, any trend can be composed of several stages, and each stage will have its own high and low value. And if the trend is going up, then each high value will be greater than the previous one. And similarly, for a downtrend, when we have a low value, then the next low value will be lower than the previous one. And our trade is closing, and our trade close a profit added to my account, $627. Amazing, guys. We keep going. So according to the Dow theory, there are 3 types of trends: major, intermediate, and minor. And the main trend lasts more than a year, and the intermediate from 3 weeks to 3 months, and it often goes against the general trend. And the minor trend lasts up to 3 weeks, and as a rule, it goes within the general trend or the main trend. And let's analyze the main trend. Basically, it is the key market movement. So that's the first point you need to know. And to determine it, it is necessary to open a large time frame on the chart, say a monthly or a weekly time frame. And this global trend ultimately affects everything, including intermediate and minor trends. And according to the Dow theory, the major trend lasts from 1 to 3 years, which however may change. Now I'm gonna change the amount of trading. I'm going all in again. All right. So let's take a closer look at the chart. I see a change in the price reversal, and I open a down trade for $627.92, and for 1 minute, of course. What I saw was the price was rising, reached the resistance level near the upper limit of the Donkin indicator, after which there was a pullback, and again it could not rise to this level. So I assume that now it will fall even more, and the data from the Arun has not changed much. So the consolidation continues. Okay, keep monitoring. And back to the Dow theory, the main trend remains in force until there are clear indication of its completion. One such indication may be, for example, the closing of the market below the previous maximum. And now let's switch to the intermediate trend. And basically, the market is moving in the direction of the main trend. And the intermediate trend, as a rule, goes against the main trend or as a correction to it. For example, the main trend may go up and the intermediate trend may go down. And by the way, our trade is closing and our trade closed a profit added to my account $1,180. Great. So let's continue, and according to the Dow theory, the intermediate trends last from 3 weeks to 3 months, and a pullback against the major trend lasts from 3 to 60% of its movement. Also, the intermediate trends is usually much more volatile. There is a significant fluctuation in the asset price than the major trend, and we have only right now the minor trend to consider. So in theory, this is a market movement lasting up to 3 weeks, and as a rule, it represents a correction to the intermediate or the secondary trend. And I would also like you to know that the Dow theory was primarily developed for the stock market because there were no other markets back then. So that's why you can see such long periods, 1 to 3 years, 1 to 3 months, and etc. But in binary options, traders mostly work with up to 1 hour, and no one likes to wait here. So that's the contrast we have. And I'm not also going to wait. I'm going to raise my trading amount to $1,000. And I want to draw your attention to this point, guys. The broker makes a limit of $1,000 for those who have small deposits. So keep that in mind. All right. Now, as you can see that the price made few attempts to rise while being at a low level. So I'm going to make an up trade for $1,000 for 1 minute. And I'm not going to stop. Let me continue with the topic. And since we do not work with such long periods of time, we can use principle number 1. The market takes everything into account and embeds all the data within it. So you need to adapt the Dow theory terms to the binary options terms so you can make trades within a day. So let me discuss it in details. So for example, the major trend is set 1 day time frame, intermediate trend 1 hour time frame, the minor trend 5 or 1 minute time frame. This is exactly how the analysis is carried out on the chart in binary options. So open the chart on a 1 day time frame, draw a trend line or a channel, then you do the same for 1 hour or for 5 minutes or 1 minute. So you have 3 cycles of price movement. Done. It's as simple as that. And back to the Dow theory, each major trend has 3 key phases: the accumulation phase or distribution, the public participation phase, and the panic phase or the implementation. And now our trade is closing. We close a profit, added to my account $1,910. Guys, I have $2,000 on my account. Now let's take a closer look at these phases of the market trend. So the accumulation phase is the first one. This is the first phase, the beginning, for example, of an uptrend. It is at this stage that investors enter the market, and as a rule, this phase begins at the end of the downtrend. And by this time, most of the negative news has already been taken into account by the market and the investors, and due to which investors, despite the low prices, begin to see a prospect in the asset. And of course, it is not easy at all to detect the accumulation phase. And as I said, it often follows the downtrend, and it can be just a secondary or an intermediate trend in the overall downtrend. And as a result, instead of a new trend, only a temporary pullback is formed. And from a technical point of view, the beginning of a new trend is always accompanied by a period of consolidation. This is when the market goes into a sideways movement and then begins to show an upward trend. You can confirm the new trend at the moment when the market has not updated the previous lows. So that's like the basic rule you should take into account. All right, getting back to trading. So let's pay attention to the chart again, and the price after an active growth makes a small pullback. So I'm gonna make an up trade for $1,000 for 1 minute. And despite the decrease in the upper limit of the Donkin indicator, the resistance level has not changed, and I expect the price to reach it. So right now, let us get back to the second phase. This is the participation phase. When investors enter the market at the accumulation phase, in their opinion, the worst is over. When the trend really unfolds, the stage of the public participation then begin. Alright? So economic data is improving, the market is saturated with good news. The more such news, the more investors get involved in this phase. This phase is the longest of them all. It is also characterized by the most active movement. The highs are constantly updated, exactly what investors were waiting for. And we are waiting for the end of our trade. Our trade is closing. Here we are. And our trickles of profit added to my account, $870. Now let's consider the next phase, which is the implementation phase or the panic phase. At this phase, investors who entered the market at the accumulation phase exit the market, and the market begins to demonstrate completely illogical behavior. Many investors, fascinated by the strongest trend, begin to think it will always be there and are in a hurry to take part in it. At the same time, the main participants are leaving it or have already left. So that's why it has an illogical behavior or a strange movement. And as a result, such investors eagerly buy at the very peak or the high of the trend shortly before its impressive fall. And to determine this phase, it is necessary to carefully study the signs that the market growth is complete. And at the same time, the more active the market growth, the stronger the subsequent decline will be. So keep that in mind, guys. It's a very risky phase. A similar story when the major trend is bearish and the price is going down. The situation repeats itself just in the opposite way. And at the implementation stage, a real panic is often formed when a lot of investors dump their assets and the price receives the last downtrend impulse before growth. So our payout has fallen to 85%. I suggest choosing a more profitable asset. The most profitable one right now is the US dollar and the offshore Chinese yuan. And the offshore Chinese yuan is a type of yuan traded on the market outside of the mainland China. Let's return to the Dow theory and consider the following formula. The trend should be confirmed by volumes. Therefore, to predict an asset price, it is necessary to take into account volumes data. And according to the Dow theory, if the trend goes up, volumes should also grow. And if the price goes against the trend, volumes should fall. And I made the down trade for $1,000 for 1 minute, and I made this decision based on the data from my indicators. The Williams line was going down when the price was dropping, which already indicates a possible continuation of the decline. In addition, the red line of the Arun indicator, which is responsible for the downtrend, as you remember, was located at the level of 100, and the blue line was at about 30, which also indicated a possible decline in price. So the down trade is confirmed. Let's go back to volumes. They increase as traders actively buy an asset during the accumulation and participation phase. And small volumes at the stages of correction indicate that most traders do not close their positions because they believe in the strength of the general trend. If the volumes do not coincide with the trend, this is an indication that it's ending. So keep that in mind, guys. And our trade is closing. And our trickles of profit added to my account, $920. Great result so far, guys. So I think everything is clear here. So let's say the market is going up and the volumes are decreasing. So the bears are starting to pull the market in their direction. If buyers leave the market or they become sellers, then the chances that the upward movement will continue are quite small. And according to the Dow theory, if the trend is confirmed by volumes, then market liquidity, the money that circulates in the market, will follow the trend, not against it. Now, the next thing is the trend allows you to determine the general direction of the market movement. Okay, so the golden rule says, don't work against the trend. And this is absolutely true. Now, back to trading, waiting for the right moment, and I make an up trade for $1,000 for 1 minute. After the completion of the last trade, the price began to rise, while the Williams line also grew, which, as we know, indicates a possible continuation of the price increase. Okay, so that's why I made an up trade. Let's go back to our topic, and according to the Dow theory, the trend works until there is a convincing evidence that it's done. And at the same time, it's important not to confuse a minor or insignificant movement with a real reversal. As a rule, trading against the trend is very risky. Guys, please keep in mind. Next, let's consider the confirmation and reversal of the trend. Dow himself pointed out how to determine the strength of the trend and predict its reversal. The main method to confirm the trend reversal is to analyze the high and low of the price values. We'll get back to this in a second. Our trade is closing. Our trickles of profit added to my account, $920. We keep going. So we remember the price does not go in one straight line. It always consists of movements and pullbacks. And according to the Dow theory, there should be specific indications for a trend reversal. What can they be? So when the market cannot update the high and low values of the price, this is an indication of a trend reversal. When the price fails to update the high, it hints that the bulls are exhausted and it's time to expect a reversal. So that's basically how to indicate the reversal. And Charles Dow recommended treating all such changes with due diligence until a new major trend is confirmed. Naturally, it is not easy to distinguish a secondary trend from the beginning of a new major trend, and traders often encounter misleading reversals, which are basically a secondary trend. So you need to pay attention. Now, getting back to trading, and I made a down trade for $1,000 for 1 minute. And I saw some indications about a change in the direction of the price. So the Williams line, while the price was rising, began to occupy a horizontal position. Such a behavior was a signal for me about a possible decline in price. We'll find out soon whether I'm right or not, but for now, let's continue our topic. Okay? Although I have already talked about all the main points of the Dow theory that can be applied to currency pairs, as we can see, technical analysis really began with the Dow theory. And it's still its basis. Trends, price values, updating of highs and lows, all this is the basis of technical analysis. And in practice, you will encounter a lot of features. Theory adapts, it lives and changes with the market. And our trade is closing. Here we go. Our trickles of profit added to my account, $920. And this is the end of our today's trading session. Let's go and analyze the results. So our trade lasted more than 21 minutes today, and we have managed to achieve some great results. And the overclocking was completely successful, and I managed to turn $50 to $5,720. And it took me 10 trades to do so. And I took the maximum risk. I went all in, but I was ready for this risk. After all, I only risked a $50, but if I lost $1,000, to be honest, that would be upsetting. And moreover, today I discussed with you the Dow theory in detail. While some critics say the Dow theory is outdated, nevertheless, most investors believe that the Dow theory is still relevant, not only to determine the phases of the best financial market opportunities, but also the market trends as the best concept he introduced to the world. So I hope this video was useful to you guys and you made the most of it. And I would like to say something. If you don't have enough experience before opening any trade, you need to study the currency pair you're trading on. And also you need to study the current market situation and use indicators to decrease your risks to the minimal levels. And also keep on studying binary options. And as you saw today, binary options and analysis in binary options is not complicated at all. And if you would have any questions, you can ask me on Telegram. I'll leave you the link to my Telegram in the description below this video. And also the link to my Telegram channel where I share daily trading signals and I also run weekly marathons to increase your balance from $150 and up to $5,000 in a week time. Make sure to check all these links below. And to sign up for Pocketoption and to get 50% bonus on your deposit, make sure to text me today on Telegram to get the registration link. And if you like this video, please give it a like, leave your comments down below, subscribe to my channel, turn on the notification bell so you get notified when I drop a new video. That's been it for today, and I'll catch you guys in the next one.